A lot of data coming out about China's economy, and that's really painting a story with kind of two conflicting views, which we're going to go into. I think the most interesting thing to take away is this dilemma that is developing around China's manufacturing sector and the relationship that they're trying to build with kind of the rest of the world. So let's jump into the story around the data in China's economy. So the first article is this: China Shock 2.0 will be different. And it's really a talk about China's return to manufacturing and exports, which was very similar to China Shock 1.0, which was in kind of the early 2000s when China really emerged on the world stage as a low-cost manufacturer. The US and Europe ended up losing a lot of jobs, although it did provide for kind of the globalization push and, reduction in costs across the board for a lot of higher tech manufacturers who were able to get parts and things made cheaply, in China. And now they're talking about how that is really moving into the high tech sector as well, with things like electrical vehicles, batteries, wind turbines, solar power, really a lot of green technology type stuff. And they're hoping that this kind of surge in manufacturing is going to help make up for a lot of the problems that China is facing in their real estate market. I will share a video at the end that I've done about all the problems with their real estate sector, which is very, very serious problems, right? So this is a glimmer of hope coming out of kind of the China economy that might help buoy them as they deal with their real estate problems. You can see in this graph the kind of investment in real estate has leveled off, whereas we're seeing, pretty dramatic increases in their industrial sector, often associated with manufacturing. And that's really coming down to, it seems to be leveling off China's growth, which is good because they've been in a steep decline for a while, where GDP growth did actually hit the 5.3% that they were hoping and that the Communist Party was targeting for the last quarter. However, the bigger story here, if you look at China's GDP growth versus the US. So China has been historically one of the best GDP growth, largely because they're still a developing nation. They're still industrializing. We saw numbers like this when we were going through this phase in kind of the early 1900s up to as late as 1950, 1960. But the US now is really kind of typically somewhere between 2 and 5% GDP growth, whereas China for a long time was, kind of between 8 and 12% GDP growth, and now they have really slipped down to as low as 5.3, kind of joining the rest of the world in slow GDP growth. And the concern here really is that, has China done the same thing with their manufacturing sector that they do with their real estate sector, which is overdevelop it, overinvest? And we're seeing, it's best in this article, these gaps in capacity versus what they're able to do. And even though Chinese exports are up 18%, the total value of those exports is actually dropping because they're taking the strategy again of, let's manufacture as much as possible, even if it hurts how much money we make off of it. The more business we take from the rest of the world, the faster our economy can grow, and largely, down the line, this will benefit us. And this, the US and Europe is kind of better prepared for this than they were in the early 2000s to understand the risk that it shows to their economy. And this is where it gets into this kind of dilemma that has developed for China, because China's problems with the West, US and Europe, as a low-cost manufacturer and the kind of abrasiveness that has caused, that's an old story at this point. But for the last 5 to 10 years, China has put a lot of money and effort into developing their relationship with the rest of the world. As they see themselves coming into power as a superpower, they have spent a lot of energy trying to kind of woo various countries and regions around the world into their, kind of sphere of influence out of the US. These regions are like South America, Africa, lots of Southeast Asia. And if they are going to return to a world where they're going to become the kind of kings of low-cost manufacturing again, this is going to put them in direct conflict with these areas of the world, specifically like Brazil, India, who they already have a terrible relationship, and lots of other places. It's very hard to woo, kind of a sphere of influence if you are going to be their direct competitor, right? For lots of the developing world, the US is seen as the consumer not their competitor. So it's going to be a very tough situation for China to be able to continue this path of helping build and industrialize these smaller nations and then turn around and just outcompete them when it comes to their manufacturing sectors, which would be very interesting. Obviously, all of this is framed around the idea that their manufacturing may be able to keep them out of economic crisis as they go through this real estate problem. If you're interested in what's going on with their real estate markets, then watch this video, which I've done around kind of the current events and why China is really on the brink of an economic collapse. I hope this has been informative, and I will talk to you soon. Thank you.